Hey everybody, welcome back to Everything Money. We're so happy you joined us today. As always, we're happy for our we're so happy inside, Paul. We're happy that our patrons are loving the software that Paul's going to show you right now. Today we're looking at Facebook. Paul, you're all over Facebook. You love arguing with people.
I do not get on Facebook anymore.
I'm kidding, but we heard so many times this social media platform was dead. It was getting taken over by the Snapchats of the world, the Instagrams of the world, and sure enough, it's still plowing through.
And by the way,
your grandma's on it, your mom's on it.
Who owns Instagram?
Facebook.
Correct. By the way, this is my Instagram.
Oh, how cute! Look at that.
And this is Trader Mo's Instagram, TraderMo_EM. Please follow me. I'm trying to get a blue check mark here.
Today, that blue check mark, it's going to be the bane of my existence. Today, we're looking at Facebook. They reported earnings. We got big news. We're going to let you know. And we're going to look at the stock price, use our 8-pillar analysis to see the fundamentals behind this company, which makes a boatload of money, Paul.
And
go on.
We're going to use our new stock analyzer tool that's part of our software because Facebook is a high growth stock. So when people say, Paul doesn't care about growth, I absolutely do. I'm just not stupid and overpay for the growth. I'm just very fundamentally sound and disciplined.
Let's get after the 8 pillars. What is the market cap for Facebook? I assume it's 17 bajillion.
It's almost $1 trillion. It's $940 billion. PE of 27.8, so that's an X. Look at this profit margin, Uncle Seth. 35% to the bottom line with an 81% gross margin. Okay, no dividend yield, not surprising. Look at this return on assets and invested capital, huge. This means they get a high return on their money and all their assets, and they get a high return on every dollar they invest back in the business. It's incredible. This is good pluses, but we only have one check so far.
Let's go to revenue growth over the past 5 years.
What do you think this is?
It's just through the roof.
29.5 to 92 billion, check mark. Insane. Look what they did 10 years ago, $3.3 billion in revenue.
Isn't that cute?
It's adorable.
How
Net
about
income.
Profit growth over the past 5 years? I'm sure it's absurd.
11.5 to 33.74. Check mark there. Tripled in price, tripled in profit.
Yep.
Okay, how about pillar number 5, which is shares outstanding?
What do you think this is? This is the silent killer of all investments, guys. Shares increasing. Nobody pays attention to this. It dilutes you. It takes the profit of the company, the revenue of the company, and splits it among more owners. So for example, if you have 1 share out of 10, you own 10% of the business. If they issue two more shares, you now own 1 share out of 12. So without doing anything, you just got diluted from 10% ownership to 8.33.
If I had to guess, I would say they're buying back shares.
I was just going to say the opposite. I thought they'd be selling because it's pretty high.
Barely, but they are buying back shares.
Oh,
2.89 down to 2.85. I'm actually surprised by this. I was in Seth's camp. I thought they were going to be issuing more shares. So Uncle Mark is not screwing you right now.
He's not creepy at all as an uncle.
No, did you see his whole surfer video, the whole surfer thing with the white thing?
Yes.
He explained that recently, and he's just like, yeah, it backfired on me. I was doing it so nobody recognized me. And then somebody did recognize me, and it was like, oh, that backfired.
He got into spear throwing this week, so.
Come on.
Yep, there's videos. It's really creepy. Like, this guy's going out there, shirts off. All right, let's get after.
There you go. Look at that.
Well, let's explain the software.
There you go.
Look at Mo.
there it
The
is.
hell with the software. Look at this guy's so funny. I love when he has to go before Congress and answer all
Oh, by the way, his
asinine
responses are
questions.
epic. Because those Congress people are absolute morons.
Yes.
And they're just beyond stupid. And they ask him questions, he's like, we sell ads, sir. It's like, that's the best. I loved it.
All right, current assets over current liabilities for Facebook.
Can I explain the software
Oh,
first?
let's keep going. You've blown through this. The video is 2 minutes long. I love you.
Well, that's why we need to explain the software.
All right, give it to him then.
Guys, the reason the software matters so much, people have told us in our Discord, we don't explain the benefits of the software enough.
That's true, Paul.
80 cents a day, you're getting the software, which tells you all the 8 pillars, all the financials. It'll have a stock analyzer tool, real estate calculator, tons of stuff being added at all times. The price you pay, you're locked into. You join the community of Discord, which has over 3,000 members in 60 or 70 chats talking about every kind of investment, all styles. People have literally become friends in this thing. It's incredible. All for 80 cents a day.
This is the Patreon. If you've never joined a Patreon, take a look. Click the link in the description below. Take a look at our Patreon, and you do get access to this amazing software you can use and track your finances. So go ahead, Paul. Keep going.
80 cents a day. You're crazy if you're not joining it. Balance sheet. Current assets, 77.32. Current liabilities, 12.7.
Yep.
And total liabilities of 30 billion. So they took all their cash, paid off all their debts. They still have $40 billion left over. That is about the best you can do in terms of a metric on the balance sheet. it's very, very difficult for companies like this to go under. This thing just spits off cash. They have very little debt. This is incredible. I love this. From a balance sheet safety perspective, this is about as good as it gets.
I'm seeing that they've almost reinvented the Craigslist. The Facebook marketplace.
Oh, it's incredible, isn't it?
So much better than Craigslist. I mean,
Is it?
and I know, Paul, you're doing the men seeking women and men.
Yeah, I don't even do the women part.
Yeah, so and the marketplace for that is wonderful, Mo. I know
What's
you tried it too.
what's the ones that like the where they like to dress up in animal costumes? Furries, thank you. That's right. By the way, what I tried to do there was try to play it off like I didn't know what that was.
Like
Man.
turtle.
What?
Like,
Hey, by the way, speaking of furries, you remember the remember the
going
Entourage
with this?
episode where
turtle and drama.
Turtle now lives in Brecksville?
Yeah, I know.
Did you know this?
I never
He was
watched
hanging
Jerry
out
it.
at the
Ferrara has moved to Brecksville.
Never met him.
Well,
Yeah.
I haven't met him either, but I think it's great because
Have you seen Entourage?
No, I've never seen him.
Oh,
so-
Entourage
My
is
God,
great.
it's one of the greatest shows ever.
Well, anyway, yeah. So
This
Paul,
is basically Entourage.
it is.
Am I Vinny Chase?
Let's keep
Ish.
going. Let me bring this back in. I took you off kilter for 1 second, and we're talking about.
But people love our rapport.
Keep going.
Cash flow, guys. This is the big mamma jamma of all things.
Free cash flow growth.
And
Paul.
this software, I'm gonna go over this part over here. So I'm here in the cash flow section, which is the most important section, I believe. And the reason being is net income can be manipulated based on SEC rules, IRS rules, all these ways of recognizing revenue and profit. Cash flow, it's harder to manipulate. Is it still possible? Absolutely, but it is harder. Cash in, cash out. Free cash flow is your cash from operations less your capital expenditures. This is the money you use to buy back shares, pay dividends, pay down debt, make acquisitions. This is the most important part, in my opinion, to the business. So, your Uncle Paul has made life better for you. I've added a line to the investing section of the free cash flow statement that actually tells you your free cash flow by year. That way you don't have to spend all your time calculating it. 13 billion to 24 billion, check mark. With an average of, call it 18 billion. Times 20 is $360 billion. So you might be sitting there going, dude, it's a $900 billion company. This is way too overpriced. Yes. However, there's a lot of growth here. So that's why we're gonna go to our trusty stock analyzer tool after Mo talks about the charts, and we're gonna show you how growth factors into your valuation.
Yeah, if you're looking to trade Facebook in a more aggressive manner, you can get in the Bitnass Nation, the middle Patreon tier, and you'll get access to Mo on a daily basis. You know, his beautiful videos he makes. He monitors every trade he makes. You'll get access to it. Mo, tell us about Facebook. Are people trading this? It looks like they shouldn't be, Mo.
You know, I don't look at this amazing run that it's had since COVID. That's just incredible. But let's get down to the 6 months of it. So something that I do want to point out with Facebook is they had this gap up in price in May. I always say gaps fill. Facebook gapped up, and even with that, Facebook came down and filled the gap. So all these, even companies like Facebook, can fill these gaps on these charts. So when I say this, don't think I'm just blowing air. But anyways, it's been going sideways for a long time, and really you're looking to make, excuse me, new all-time highs. Go ahead, and if you do keep making all-time highs, keep going with this thing. Facebook is a strong company. It looks great on the chart.
You're telling me we're not in the overbought region here, Mo?
So we are in the overbought region, but you can go ahead, and if you're in this, great. Just keep riding it, because this is incredible. If you want to get in for the first time, I do believe that this is an okay time to get in tech stocks that are making new all-time highs because of all the basically free money that they're giving away. I mean, with interest rates so low, these tech companies can really borrow a lot of money. And that's gonna, I mean.
But you know what? They're not
keep
doing
growing.
that though. If you saw from their balance sheet, they have very little debt compared to all their cash on hand.
Yeah. They have the ability to, though.
Okay. You're right.
Go ahead, Paul. Show us this new software that our patrons are
I
going
also want to show you, this is the 8 pillars tab. It shows you all the checks. Of course, our valuation metrics are the most expensive ones, and those are the X's. Now, the stock analyzer tool, this is very ugly. It's our beta version. Nobody else has it right now. What it does, it allows you to, it shows you all your attributes for 1, 5, and 10 years that might matter. Ask for your assumptions. I'm doing a 7-year analysis on Facebook. Now, revenue growth. If you look at revenue growth, it has been slowing, obviously. It can't grow at the same pace as before. This is why I urge people to always understand when you have a very large company, the growth will slow. In the last 5 years, they've done 33% a year. Last year, they did 28%. I'm going to go and say it's going to be 20% a year for the next 7 years. Share buyback rate. They barely bought any shares back. I'm still going to put this at 0. If they buy back shares, all the better. Net present value, NPV, 10%. This is what return you want to make on your money. The average for the stock market is 10%, so I'm trying to get what I think the stock is currently worth. Future PE. Now, typically, the average company sells for 15, but I can understand why you'd pay a premium for Facebook with how much they really control social media. They have billions of people around the world that use their social media every single day. They've got a bunch of Karens out there complaining about the manager at the local
dog grooming store.
Yeah, dog grooming store. So I'm still going to put 18 here. Profit margin. The average profit margin actually increased in the last 10 years. So I'm okay keeping that because I do think that as they control more and do better with ads, they'll have a good profit margin. So I'm going to assume 35%. Free cash flow as a percentage of revenue, it's decreasing over the years. I kept it at 25% because I think that's reasonable. And a multiple of free cash flow, I want to keep it as the same as PE, 18 times and 7-year analysis. Ready for this, Seth?
Go ahead.
What's the stock currently selling at?
Facebook currently right now reaching an all-time high of 330.
Here are the two stock values I have.
Oh boy.
500
Oh, wow.
and 357.
Wait a minute.
So according to the assumptions I made above, guys, Facebook is a buy. If you believe those assumptions and you're willing to wait 7 years, Facebook is a buy today. As of this very second, you'll get about 10% return. Now, do you want a higher return? Sure. Ready? NPV of 15% a year. Change it. Two values, 378 and 270. So based on the PE method, which is right up here, it is in the money right now. Based on the free cash flow method, it is not. So what's the right number? Probably somewhere between these two if you want to make a 15% return. If you think those assumptions we made are correct. Because remember, folks, every investment is worth the present value of all future cash flows. There's a lot of assumptions that go in there. What are your assumptions? I thought the revenue assumption of 20% a year, that would take revenue to year 7 of $338 billion, which is triple what it is today. Does that sound reasonable? I don't know. I mean, they are growing. The world is becoming more and more advanced technologically. We're going to get more and more third world countries joining. And I have to think Instagram and Facebook are going to be a very, very difficult business to overcome. You follow what I'm saying? Because the world is getting very mature internet-wise, right? So I look at this saying, will it be hard to overcome of Facebook? I think they're being aggressive with their acquisitions too. They want to make sure they're making acquisitions that are, they own WhatsApp. Are we all familiar with WhatsApp? We know it because we do a lot with foreigners, but WhatsApp is extremely popular, right? And they own it.
I think it's also incredibly unheard of. I mean, Facebook has reached our parents, baby boomers. I don't think they know what WhatsApp is, but
why is that though?
A lot of room to grow. I mean,
because WhatsApp is a very international thing.
Yeah.
It's
when I was abroad.
When our good intern over here, Nate, was abroad, he used WhatsApp a lot. I use WhatsApp to correspond with all my friends in Mexico. That's all we do. And we have bots on our page below that say contact us on WhatsApp. Well, it's also because they're all overseas, so so when they get caught, they don't get. It's not us, by the way. Whenever you see those comments of buy this crypto or send me money for crypto, it's not Pablo. So either way, I'm looking at this saying, I'm factoring in growth. When people accuse me like, oh, he doesn't care about growth, I absolutely do care about growth. Now, let's look at growth again. Let's say you think growth is going to be 25% a year. What's the stock worth now? 489, 349. Buying it today. So that's what you decide. Now, me as a value investor, guys, I want a really high return on my invested capital. I want to buy it when I think it's so obviously below what I think it's worth. I'm not buying at these levels. But if you're okay with these levels and these assumptions, I even have 15% returns in here. That's pretty solid. But it's a 7-year outlook. So you have to be okay with ups and downs. You have to hope that over 7 years, the stock will do what it's supposed to do. So we actually have Facebook at a buy here based on the market getting you 10% a year and 20% growth rates. We actually have it as a buy.
Interesting, very interesting. That is our take on Facebook. I'm somewhat baffled because there's so few times we're in love with some of these stocks, or at least
I'm not in love, but I'm sitting there saying it's not. If these assumptions turn out to be true, Facebook is a buy today.
Interesting. Join the Patreon. Take a like. We're giving away a Tesla in about 3,000 subscribers. Once we hit 50, we are giving away a brand new Tesla Model 3, and one of our patrons is going to get one. So pretty exciting stuff, guys. Thanks for joining us. Fondle the thumbs up. See you next time.